Alright guys, so I'm going to make a video about cycle theory, looking at the macro environment. I'm going to start with looking at SPX on the 3-month. And, I was reading this Elliot Wave article. I'll share it. It's really good. I've been trying to look for something citing Ralph Elliott's 70-year bull market prediction. So this one kind of touched on that. So I'm really interested in considering what would then be the corrective wave. With corrective waves being half the length of the impulsive wave on average, according to Elliott wave theory. If we had like 70 to 100 years of up, that's like 30 to 40 years of down, right? Up to 50. So, and it's hard to imagine that for humans because, we only live 70 years. So everybody that's made all their money in the stock market right now is basically just in 70 years of up, and I imagine it'd be very difficult for them to imagine 50 years of down all of a sudden. So I basically went back through everything I've ever looked at. There's some interesting components I'll share. For example, this is an interesting table. William Gann predicted a bunch of stuff in 1909. And we're right here right now, where I think we've hit the very high stock prices a little bit early. We did have the COVID pump, so maybe we're like a year early on this. But 2022, I wouldn't say it's very high stock prices. 2023, it's not seeming like it. It's going to be a pre-election year, which generally do well. So there's still a chance that we have one of these blue years. Because we had the panic, the COVID panic. It's kind of funny how that was predicted 100 years earlier. Because it was in December of 2019, right? So boom, 100 years earlier predicted COVID like nuts, right? Think about that. Followed by, I guess we had a nice run in 2021. If we look at Ethereum, 2021 was a nice run. So we could easily say, we hit the panic and the low stock prices in 1 year, kind of started going a year early, hit our very high stock prices in 2021, lesser highs in 2022, and now potentially 4 years of falling prices. I'm also looking at, what Ray Dalio is saying, so we'll kind of look at that as well. He has a lot of good research that we'll point to. So I'm immediately having to start trying to invalidate potentially 4 years of falling prices, or what would that look like? 3 years of up, 3 years of down, or 7 years of straight down, because like the inventory cycle is 7 years. It's like an up and down cycle. The Kondratiev wave is like 54 years. Elliot says, an entire cycle can be like, 200 years, basically. There's also, 10 and 20-year cycles that people talk about a lot. So we kind of have to think in those time frames, I think. So let's look at some of these other things. Basically, I think this is a fitting representation of what that might look like. Here we are at 2022, and here's a decade, 2032. So, basically down for, 4 years, up for 4 years, down for 4 years, and then up for 50 years for a Kondratiev cycle. So following a 1, 2, 3, 4, 5 Elliott wave impulse, which would then be followed by easily, 50 years of like down, right? So like 20 years of down, 10 years of up, 20 years of down. So basically by the time my kid's, 25, he can just go long for his lifetime. Then he's going to have to basically tell his kids by the time they're 20 to short for their lifetime. And I'm going to try to get that message to them, and see how that can hopefully help us prepare for these major cycles that humans have a hard time kind of perceiving. But I think this is an accurate kind of picture here. Are we going to hit those same highs? It's hard to say. We're probably going to hit some lower highs if we even can try to get close to them. One guy is looking at these Elliott waves like so. Actually, let's look at Bitcoin. So we kind of have our 1, 2, 3, 4, 5 pattern here. It's this isn't really a completed correction, I wouldn't say. Could we hit 1200? I don't think that's out of question, as long as the correction doesn't go into wave 1 territory. Then so we can go as low as 1200 and still be like on another crazy impulse up. So could we go down for like a decade? What would that look like? Yeah, we can get there within a decade, potentially. It would be one way to kind of perceive that. Everybody has their log charts, right? So it's interesting. Obviously, El Salvador is going basically all in on Bitcoin. Banks are starting to buy it, and Saylor's saying he can convince his banking friends that it's the new way to send money and things. So the market cap of all of crypto is at 4 trillion. Gold is only 10 trillion. So it got halfway there. I think it's very possible that even during this depressing 10 years potentially, not everything will be dropping. Like, we should be able to have a commodity super cycle. If we look at, for example, SPG divided by SPX. So like commodities relative to technology. So, Bitcoin was looked at as technology, but it's becoming more like gold. Gold is starting to outperform Bitcoin. So I think it's still going to take some time. But I think eventually they'll start rising together very soon. Fiats are already currently rushing to Bitcoin instead of something else like maybe the dollar, compared to like 2008. So this is, we have a lot of room to rise on commodity prices. So there's some people talking about this commodity super cycle. So I think Bitcoin's going to be on that super cycle because the last, SEC, I think, chairman or some hot shot basically called Bitcoin a commodity. I think we're starting to get some clarity between what's a security and what's not. Like Ripple, for example, likely going to win in court for not being a security. There is some concern with Ethereum, most of the validators being in the US, so basically US is claiming jurisdiction over Ethereum, and what's this all about? Decentralization. We don't want anybody getting locked out of anything, because even like PayPal, for example, recently tried to say they're going to fine you $2,500 for sharing misinformation, taking it out of your bank account. So that's what people are saying, like a global government based, like, CBDC, central banking digital currency, would be treated in such a way where they can take, your money away from you easily for random little things and just change the terms on you. So that's why Bitcoin will still be around. Black market's not going away. It might, be trading at those lower prices if all the liquidity is drained out of it, because, maybe food gets so expensive that people can't afford it, so they have to sell their Bitcoin and get it. So, but, I think once everybody sells, once people don't have any more Bitcoin to sell for food, like, then Bitcoin price can really rise. So we'll kind of want to start watching when Bitcoin's going to start rising with interest rates, with rising food prices. There is some talk about oil prices, turning over right now, this October, which kind of coincides with like October bottoms. Like 80% of the time, October is the month where the bottom is reached. So, it's still kind of like buy the dip mode, I think, this month. It's for choppy action, basically, for 1 month of up, 1 month of down, 1 month of up, 1 month of down, and seeing where we end up at the end of those months of up and down, and probably more than likely will be, I think, recovering slightly next year leading into the elections. They're going to try to make oil prices go down, which will help equities rise, and people will vote for that person. So we kind of have to play off that as best we can, assuming this war doesn't escalate into nuclear war. Obviously, that's a really big concern. If half of Bitcoin disappears because we get EMP'd and people's keys are all stored electronically, and, servers are wiped out where, people's passwords are managed and stuff like that. So, there's going to be a small handful of people who still have some left, and Faraday, ledgers stored in Faraday bags and underground mining facilities, I would imagine. So, Bitcoin's not going to disappear. It might become really difficult to trade it for 3 years or so, or, because it can take like 3 to 5 years to get technology back up and running after an EMP, I think, in a country, if it's like a nationwide outage. I don't know how we're going to survive that, but it's going to be some dark years. People probably won't even be thinking about Bitcoin, really, in that type of situation. So, man, I mean, do you panic sell for that type of thing? It feels like it's almost getting to the last leg down, though, the final capitulation. So, still a lot of long-term holders are not selling, and short-term holders are getting better entries than long-term holders right now, even of a couple years holders. So it's definitely good opportunities right now. There's still a lot of people who are, I think, bullish overall, and some legit guys. Despite it being a cold winter, in Europe, with potentially not having enough gas, that can still put a curveball on oil prices reversing or not, which, you almost have to kind of expect another panic scare as a reason to print more money or something. But there's a chance, interest rates are going to rise with the printing of money, which is, I guess, kind of already happening. But I guess what's kind of relevant to look at is, so basically read through most of these from Economic Principles from Ray Dalio, and essentially, I think he's arguing that the next decade, 2020 to 2030, is going to be most like the 1940s. And, what was that like? So, let's show you kind of his claim. Okay, so he thinks it'll be most similar to the 1940s war years, when he's talking about the coming paradigm shift, right? So And another thing we kind of wanted to look at is, where are we now compared to even 20 years ago? And technically we're less if we, take out the tax cuts that basically made us, 250% gains. So what's likely to be the case if interest rates won't be sufficient to curb inflation, increase taxes to pay the debt they have to print to offset the purchasing power decrease. So it's going to be a big squeeze. I think if we look at some of the interest rate charts, like interest rates can rise for 40 years and then drop for basically 30 years. We might retrace a little bit on the way up, but so we'll have 1 to 2 years periods, I think, of maybe pandemic driven or some other kind of international pressure driven quantitative easing, because US rising their interest rates as much as they are, like UK is already calling for it. There's going to be an IMF meeting this week. We'll see what they say. UK is going to stop buying gilts on October 14th, potentially suggesting what they think the US is going to do and maybe ease off so they don't have to keep buying them at that point. You look at the monetary base as GDP, it can have 3 peaks before it really basically flattens out for, 30, 40, 50 years. And so we can potentially still really see some production, especially with the war. I think that'll help kind of round things off a little bit. So kind of to look at if the GDP might rise, over this next decade here with kind of what the chart pattern suggests could take place. Essentially, we want to look at kind of some of the things here. So it's like, are we going to be like the 1940s as his hypothesis, or maybe the 1970s? It's kind of two comparisons. Gold did well 30 years, 30% per year. Commodities only 15%. 1940s, still 8% on silver and 9% on stocks, 8% on commodities, 30% on bonds. So I think he's suggesting interest rates are going to keep rising over this decade, which is in line with that macro interest rate chart. I think in either case, Bitcoin, gold, silver are still going to be decent options, unless you want to get bonds where inflation's probably matching 28 to 30%. Like, if you look at everything, we can go over that in another video, I guess. So I don't have to kind of go search for that information right now. But essentially, here's the 1940s. It's war and post-war. We're kind of war and post-war, so it's probably going to be like that, where or it might be stagflation. We hear lots of talk about stagflation, low growth, high inflation. I think either one of those or a combination of those is potential. So if we look at what happened in those years, right? So if we look at the 1940s, war and post-war, equities and commodities both rose. Interest rates didn't really rise. So yeah, are we going to see them drop over the next decade? Yeah, we'll see. I'm not so sure. That Macro Alf did suggest to get bonds, which on 30-year bonds, and he managed like a $28 billion fund. So he thinks 4.5% or 4% is close to the top. So get those long-term bonds at 3.5% even, because he thinks within the next 20, 30 years they're going to do so much damage, they're going to have to bring the rates back down. So this was a potential outcome, I think. If we look at the 1970s, low growth, high inflation. Equities and commodities both can rise over that decade. Equities having a bigger drop in the middle, like 3 years up, 3 years down, and then up in continuation. So I think that's fitting with kind of what we'll see on the S&P 3-month here, if we go back to that in a bit. And that was with rising inflation and bond yield. So that's the short rate. So, commodities and equities and interest rate can rise together in this type of decade. So, we have to not always kind of just think, oh, inflation up, Bitcoin down, or, rates up, Bitcoin down type of thing. We shouldn't fight the Fed. But here we see pretty clearly, rates rose in the 1970s, but so did equities and commodities. So we can try to stack that onto a chart and just to kind of take a quick look. So like if we wanted to look at SPX and we wanted to compare like 30-year bonds, US 30-year, and what were the 1970s were rising interest rates, right? So 1970s, we might actually want to look at a 2-year. So you can kind of not be looking 30 years out from the 1970s. So the 30 years, the lighter color. Not sure which scale that's on, but essentially in the 1970s, right here, we didn't have those interest rate charts. Let's see if we get a better one. Fed funds rate. Will that go back in time? Yep, that goes back good enough. So this lines up with that interest rate chart we were looking at. So 1970s interest rates rocketed, but the market went up, fine. So yeah, that's kind of what we're seeing there. We could have another one of those years. A lot can happen here. These drops were with interest rate drops. So, this drop was also coming, with an interest rate drop. So do we want it to drop here? Type of thing, right? I mean, for it to drop, it needs to be like panic and stuff. So it's almost fine if interest rates keep rising and Bitcoin starts rising with it. That's almost my preferred path here. And yeah, buying the dips, essentially. Because, I mean, S&P rose with interest rates going up and interest rates going down. Like, don't fight the Fed. Okay, why not? So then we're gonna have to start thinking about cycles, right? Macro cycles. So that's what we were doing. And to kind of look at some of the other things he was talking about. Let's see. I mean, in this one, he was basically talking about India being strong, China being strong, Singapore being strong, Korea being strong, and U.S. not, and all these things. Like, the only thing we have for us is the reserve currency, and so that can quickly fall apart within basically 2 years. According to Ray Dalio, the reserve currency can be dumped within 2 years. So are we gonna, have easing on Friday? Are we gonna keep printing? Are we gonna keep increasing interest rates? Are people gonna keep running to Bitcoin? Probably. Will it rise with commodity super cycle? Yes, probably. Um, will Bitcoin rise if interest rates fall? Yeah, probably. So it's like how can we see a 10 to 20, 30 year bear potentially? Um, if in all these outcomes, Bitcoin's going to rise essentially. I do think it's going to be king. Cash is going to be king. I'm not so sure about Ethereum anymore, unfortunately. Um, but I don't think the technology is going to stop. So, what will it be valued at? That's a separate question. If people can't afford food, yeah, Bitcoin's price will probably drop, right? Until some certain catalyst, right? Until somebody's like, yeah, it's time to adopt this. We think the market's gonna, hurt damaged enough, and it's ready for the next bull cycle. Like people are gonna buy the dip. There's enough people in the world willing to trade the ups and downs. So, 20 to 40 years of down doesn't sound fun. Neither does 10 or neither does 3. But I think if we go back to what it might look like based on kind of those different cycles we looked at, um, essentially this, right? This right here. That's basically 3 years of down, 3 years of up, 3 years of down. And that's exactly what the 1940s diagram looked like, where the next part of it was a continuation up. So that's also in line with kind of US 10-year rates curving over, having some sort of minor correction. So now we're at this kind of double top potential formation. So we really got to see what happens here. We really want it to not break this high in the next coming days, to potentially see, some nice retracements on this. However we get there. So that would be pretty impressive 2023 midterm election year, just to get the presidency, and then they get back up to wherever, and that would be so bullish, right? So you got to be prepared for that, not miss out on these crazy runs, even despite this potential 3 years of down, because there's probably only one more leg down at this time, before a nice potential. We were looking at 2 to 4 weeks up for October, but we're kind of running out of time for that. So if this isn't a good week, we're going to have to wait till a nice bottom in October. Maybe buy a position for a month, see how it holds up into December, because we should have a December rally, probably a January drop. So just based on some of the things I've seen so far, we look at Season X. So if we look at, for example, Bitcoin, right? What does it do in, we're in midterm election years right now, right? 2022. So down to the beginning of October, then up through October, right? So we could have this, and then down through November, and potential up, right? So that's one kind of analog. And then just to kind of give you a perspective, pre-election years, we can be up through May, type of thing. And then if we look at ETH, same thing, up through May next year. This year, just straight down, don't even get a November, October pump. So, since Bitcoin and Ethereum don't agree with an October pump, it's we'll see if this week isn't strong. We'll probably have to short through, mid-December. We can look at SPX. This one's also thinking down through mid-December. If you look at DJI, same thing, like bottom in October, up for a month. So, there's a handful of candidates suggesting November could be a nice month, kind of halfway through October. But expect basically a month drop until some point in December, kind of along the way. So the closer we get to November without pumping, the less likely we are to kind of have this type of pump of a month and dump of a month before we, move into that kind of normal pre-election year pump. So that's what we should try to play. Obviously the war, with the war, it's like by the invasion usually. So I don't know if this constitutes another invasion, because there's always going to be a bunch of panic that hopefully doesn't turn into nuclear war, and then the markets are just like, okay, great. So kind of leave it there for now. If we wanted to also look at BTC, how it performs on months, like October is probably, I guess, not the best, right? Even November. So like the second half of the year is just not as good. For Ethereum, October has a chance of doing, a 7% gain. So, and then not so much in October. Even January's are bad. So kind of what we were thinking with those pre-election years is, down for January, and then, up through March, April, or May. So I think that's enough for now, except for maybe one more thing. Some of the things that were really also on my mind. It's like, you look at something. Actually, no, let's look at first Ethereum one more time, or Bitcoin. You look at something like this. Let's just add total cap on here really quick. Where are you, total cap? Okay. Here, I can move that one. So we want to move that one on here. So like, you can basically call a crypto top with this indicator, this squeeze momentum indicator. It's like, once we counted the 5 waves, the monthly momentum started turning down. It's like, okay, we need to basically think this is down until weekly starts turning up, right? And, basically have at least 3-6 months of down, maybe one more month of down before we can start turning up again, type of thing. So it feels like we're still close here. We are almost green on the weekly. So assuming we don't get another one of these type of formations, where it goes down and then up, that would be really bad. And we have 3-day turning up, so we got to kind of look at that. So once the daily starts turning up again, I think I'll be easily going long again. We do have this bullish divergence. Just this week, is looking weak. We were looking at Ethereum. This is not very healthy. This like descending resistance right here, it just turned red on 12 hours. So until this starts turning up and daily starts turning up, we can't really be longing this, in my opinion. So holding a GMT short and a sushi short, so those should play out decently. So it's like, we are bouncing off this middle channel here, so that's fairly healthy. Break a higher high, probably get stopped here a little bit, kind of work our way up, but we do need to see that buy and demand come in. We do have nearly tanked volume, so just gonna kind of have to wait to get to the 14th of October as it slowly gets less and less volatile. So we'll see just opposite reactions day after day probably until then, until we hopefully see some green volume start coming in with the news. That would be kind of the ideal scenario. But I guess the thing I wanted to point out is like 6 months, right? 6 month time frame. You know, if we were calling the crypto top with like this monthly turning over on this indicator, why would we ignore the 6 month? Like if we try to like, I don't know, look at these cycles, see if there's any sort of symmetry. You can kind of see when things top and bottom based on this detrended rhythm oscillator. You know, you see 40s and 50s, those are common. You see 80s and another 40. Here's like a 70. So, you know, it could take between like 50 to 70 bars to hit the down, essentially. Like out of the last 4 bottoms in the last, 100 years on a 6 month time frame, at least half of them were 40. So you almost have to expect it's going to be at least 40. Like, 20 maybe, at the least. So let's measure 20 6-month bars from here. Well, it's basically 10 years, guys. So 10 years from 21 to 31, that fits that whole sideways 3 years down, 3 years up, 3 years down. So essentially, if it looks like the 1940s, it's going to look like this, 3 years down, 3 years up, 3 years down. So that's what can happen with that 6 month down momentum, which is in line with Ray Dalio's stuff, which is in line with Elliot Wave's forecast, which is in line with Gann's charts. So like, I don't know, trade 3-year time frames potentially, where long-term holds is becoming less and less of a viable option on anything that's too risky. We still have to kind of see this stuff dwindle and see where that news cycle direction is going to be, and there's still a good chance we have one more wave up. That 50 years of up, like that Elliot chart I showed you. So let's kind of come back to this, 2032. And then 5 years of up, then another, 10 years of down or whatever. So hopefully Ray Dalio is still alive to tell us kind of what his thoughts are there, or, we got to keep studying how he did. And I think he did a great job putting together all that research. Still listening to his book, but I'm going to call it good here. Have a good night.